Welcome back. Here with us on Bazaar, and it's now time to put the spotlight on the private equity space. There's been a huge pickup in deal activity, in momentum, and a lot of private equity exits is what we're seeing in the listed capital market sphere, with PE firms leaving via big block trades and also, of course, IPOs. There is a slowdown in fresh private equity investments in the meantime. So talk about a lot of these trends and what lies ahead for the rest of the year. Rahul Bhasin, managing partner at Baring Private Equity Partners, is with us now. Rahul, great to have you on the show. Good morning, and thank you for taking out the time. So let's first start with the big block deal party, right? Because we're seeing, promoters cash in. We're seeing a lot of private equity early investors move out as well. What do you make of things? Because the first point of debate that always gets struck is whether this is indicating some sort of a top of valuations, or whether this is just a sign of a maturing, deeper, more liquid secondary listed capital market. What's your sense?
I do get a sense that it's a bit of both. Now, if you see the private equity industry takes money for a limited time, right? It's not like the mutual fund industry, etc., where people hold assets forever, effectively, as long as the investors have money in them. Private equity industry is time bound, so any investment made, you will see divestments. Now, that mode of divestment keeps evolving and keeps changing depending on market conditions. Sometimes it's strategic, sometimes it's M&A, sometimes it's via buyback, and sometimes it's through the listed markets and the public markets. And you're seeing, one manifestation right now. As far as public markets are concerned, we really are in a Goldilocks kind of scenario right now, right? The economy is chugging along. The real estate cycle and its, all the I call the derivatives of that are all have revived. Interest rates have been fairly modest. And there has been a huge transfer in the savings habit from bank deposits, and the mix of savings has moved a lot more towards equity markets in the last decade or so. Now, you combine all of these things and you have a very attractive stock market in one way. And therefore, there's a lot of capacity to drive your exits through the public markets. I think that's really the
question is,
what's playing out at the moment.
Rahul, the question is, do these exits indicate a bit of an interim top? Because PE money is supposedly smart money.
Look, I think that what you're seeing is that, post-COVID, etc., there were no exits possible at that point in time, right? So I think you're seeing a bunching up of exits, given timelines of funds. I don't think that there is necessarily a a timing call being made. That's not the sense I have. I mean, most of the assets which are being sold, if you look at the amount of time they've been held, it would suggest to me that most of these funds are maturing and it's time to return the capital to the investors.
Mr. Bhasin, morning. This is Reema here. Now, Barings has always been very strong when it comes to playing the Indian technology space. In the past, you all held, you all held positions in Emphasis, Coforge. You've exited it now. But what's the view on India tech? And currently, where is it that you hold stake in which companies? Any listed, which are the unlisted companies? And has your IT portfolio shrunk a bit compared to the past because you have exited some of the large investments?
See, look, I think that technology and software is the world's fastest growing industry. It will stay the fastest growing industry, and it will eat up all other industries. I think what people have missed is that it will also eat itself up. And I think that what is happening now is you are going through a phase where because of AI and because, code writing and a lot of work that Indian IT companies were doing, at least on the services side, is now getting automated. There is a very vast increase in productivity which is taking place. Now, Some of it that has played out, so a lot more is going to play out. And as that happens, I think that you will see that the business models will need to transition. And I think that the IT industry or the large IT service companies, I think that you will see their businesses transform, transition, and they are at an inflection point at the moment. But I think what's more important is that IT is now enabling different business models, revolutionary new ways of doing things across all sectors. So we still play IT and we still play tech in a very major way, but it's just that which business model you go after has to keep evolving along with market conditions and market situations.
In
It's
tech, which is
not
the
that
business
IT
model?
services will do badly, it will continue to do well. I don't think that anyone, anyone except the Indian companies will dominate this space, but they will go through a transition time. I mean, they will go through a time when, because the enhancement in productivity will lead to lower amount of absolute work if you look at a time and material kind of model, and that will, of course, inevitably in the longer term lead to more work and more demand. But there is an inflection point and a state of flux, which the industry will go through, and I think revenue uncertainty and business model uncertainty for a while.
So you said in technology, it's important to bet at the right kind of business model. When it comes to the Indian IT services, as they are going through a transition, and the industry is in a bit of a flux as they adjust to generative AI and all the developments over there. Is it better now what's the private equity way of thinking? Is it safer to now play some of these smaller companies which are more niche, generative AI, till the, IT services, the large cap companies find their feet?
See, look, younger companies will always be at the cutting edge. The reason why they exist is they're at the cutting edge. Because they're at the cutting edge, they will tend to grow much faster. But technology has a life cycle like anything else. Once they start maturing, they'll have to move from technology-centric to customer-centric. And then they become like the other bigger boys, in terms of how their business model is. Now, the issue is that while they're leading with technology and not with customer centricity, you will get very, very high growth upfront. And I think that we all as a business tend to chase growth much more. It's a very important driver of returns for us. Now, like I'm saying, that's one aspect of it. But if you look at the application of technology or edge technology or satellite technology, or you look at technology as applied to medicine, or you look at technology as is being applied to sustainability, or you look at technology which is being applied to transportation, you're seeing multiplicity of applications of technology which are revolutionizing all kinds of businesses, and the opportunity sets there are massive. In fact, I've made this point earlier, but if you think about it, from 2008, for almost, I think 12, 13 years, you had almost zero cost of capital around the world. You add that to the fact that if you look at the number of scientists, PhDs, engineers working today, that number is more than the cumulative number of the same type of people in the history of mankind. The cumulative total is less than the total today. You juxtapose the zero cost of capital along with this fact, and I think that we have set ourselves up for a huge technology revolution, and a lot of it, you're seeing only the early stages of it. I think this will continue to play out for at least the next decade. And a lot of business models will get...
Yeah, sorry, got your point on technology. Actually, we're running a little short on time, so I wanted to quickly get your take on a lot of the other sectors that you have active interest in. Consumer is one such space, and I wanted to sort of understand the thought process, because these stocks, at least in the listed universe, they've been testing investors' patience. The market has moved on and is looking at, things like industrials, etc. And you have some exposure there as well. So what do you think of, consumer and healthcare right now? And within industrials, are you looking for, any newer bets? What additionally do you have your eye on now?
See, consumer, the companies, the sort of traditional companies, listed companies are fabulous companies, right? I think the real issue is the challenge is of valuations. If you look at the last 20, 25 years, the amount of PE re-rating that these companies have undergone, it's very intense. And, I find a lot of bemusement when I see that, this consumer company was at 80 times earnings, now it's at 70 times earnings, therefore it's cheap. I think the fact is that cost of capital was so low that all of these companies have got overinflated in one sense, right? As far as the hiccups in terms of growth, 1 quarter, 2 quarters, I think these are hiccups. I mean, these are very sound businesses. They will continue to have good growth trajectory for the next decade, 2 decades. I'm not very sure that they constitute good investments at this point. I think they're all on the expensive side. As far as industrials, etc., are concerned, look, we've not had a proper capex cycle in this country for almost now. I think 2011 was the last time you had, serious capex cycle. I think that with the turnaround in real estate, you're seeing now, even in hotels, you're seeing prices of hotels go up. You're seeing hospitals utilizations going up. You're seeing malls getting full again. I think you'll see that entire value chain getting investments and infrastructure investments as the government is enabling that. And then you will see all the value chains which feed into this. I mean, if a house gets sold, tiles will get sold. If tiles get sold, durables will get sold, soft furnishings will get sold, furniture will get sold. So you will see a cascading impact of all of this playing out. So the environment is very benign in that sense. And, the only challenge that we all have is that what's not already been discounted.
Yeah, fair enough. And I think that's where the real debate lies. Unfortunately, we're out of time. I would have loved to pursue that question on, where value still exists, but perhaps we'll leave it for another day. Thanks for joining in. Great to have some thoughts from you on the subject at hand. That's borrowing private equity and how they're looking at opportunities in the Indian market.